Okay, let's get started with the second half of the presentation today. And this is focusing on something that we call the multi-year financial dashboard. So first, let's just talk about what dashboarding is. So basically, that's any attempt to present financial data in an easy to read visual document. So I've seen schools use dashboarding in a couple of different ways. Sometimes in addition to the monthly financials, the statements of activity, the P&L, all of those things. They'll do a one-page dashboard that just visually depicts how the school is performing based on the budget. It's just a way to present information in an easy to digest form. There's different kinds of dashboards. So I mentioned one that can be used monthly. The one we're going to look at today, I call a historical dashboard because it takes 11 different items, 11 different points of data and puts those on a dashboard for several years of history of the school. So it's very helpful to give you a strategic snapshot of how the school's doing on a variety of things that we think are important for financial planning. So you've received an example in your email. We'll look at that example at the end, but the first thing I want to do is take a look at the 11 different elements or the 11 different critical parts to a historical dashboard, and then we'll get into what the example looks like. One caveat before we get started. How you do this in the actual format really isn't that important. I've sent you an example. However you do it, be it on, slides, be it on a spreadsheet that takes a different form, don't worry too much about that. The important thing is that you're tracking all of this information in an easy to digest way. I wanted to send you an example just so you have one, but don't feel like you have to use that. But it's an example. So if it's helpful, fantastic, use it. If you want to create your own, by all means do. The important goal here is easy communication of financial information. You know your board, you know your finance committee, whatever is going to do that in the most succinct way is what you should do. We've provided just one example. Don't feel like you have to use that. Okay, let's take a look at the 11 elements of a historical financial dashboard. Number one, no surprise, is enrollment. So you should be tracking the enrollment of the school at least for the past 5 years. In the ideal world, you can go back 10 years. I don't know if that's realistic depending on what kind of records you have in your school, but definitely shoot to have at least 5 years of enrollment data. So this includes the total enrollment, the enrollment by grade, and that's critical so you can track retention or attrition, so we can kind of see, are the kids staying, are the kids leaving, what does that tell us? Having the total number of enrollment is important, but it doesn't tell the whole story. You've got to drill down and make sure you understand what's the grade by grade enrollment. Obviously that's critical for staffing as well, but no
David,
surprise that enrollment's number one.
this dashboard, the dashboard that Rick did for us, that's where we saw the mistakes that we were making and not seeing the attrition between 4K and kinder. That's how we identified it.
Talk a little bit more about that.
Well, because he had put together this dashboard for us and we had been tracking the enrollment, once we put that together, we were able to see that over a period of years, we had some real percentage decreases in certain areas. 5th to 6th grade, we knew was a little bit of that was always a little bit of a break for us when people would leave to go to middle school. But we didn't know how much. And so I think that's the key for enrollment. To track the enrollment that way really does help you determine where for a lack of a better analogy, where you've got leaks, where water is leaking and you don't know it's leaking.
Right. And I think those specific retention points are going to be different from program to program. Certainly, at from division to division if you're a
Right, right,
multi-division school. But if you're an elementary school, there may be certain points where you really, really want to drill down and identify if there's a problem. Like you said, it's amazing how once you have all those numbers in a row, it becomes really, really obvious that otherwise
right.
you would have missed that.
Well, what's interesting about it is that we knew that the attrition from 4K to kinder was an issue. We always knew that. We just didn't know the degree to which it was an issue.
Yeah.
And once we saw the enrollment in this kind of form, it really helped us.
And then you can figure out, okay, well,
Right.
what strategies do we need to look at? What do we need to do to
Correct.
address that specific
Right.
retention problem? Operating cost. You need to know what's the annual cash cost to run the program. Specific, and this is critically important when you get into net tuition discussions, but you've got the budget, you've got your expense line items, but you need to have a very good grasp on what is the operating cost of the school, so you can also track what's the operating cost per student. That's a
Mhm.
really important conversation to have when you're setting tuition and when you're talking about financial aid. And then also the increase from year to year. You may be in a situation where you are not increasing enough to continue to deliver the value. You may be in a situation where, wow, we are really, we've been increasing the operating costs dramatically. But if you don't drill down, have a really good understanding of the story that the operating cost tells from year to year to year to year, you're missing an important piece of data. Tuition and compensation, no surprise there. What's the weighted average tuition per student? And we think that the weighted average is a more important piece of information than the average tuition. And basically, the weighted average is just taking a look at how much income do we have at all the different levels of tuition. Depending on how many different tuitions you offer, you may have 5, 6, 7 different types of tuition. Trying to figure out, okay, how much income do we have at this rate? How much income do we have at this rate, et cetera, and then divide by the total enrollment. And what that gives you is the weighted tuition. That's important because depending on how your tuition spreads out, it's never going to spread out completely normal. You may have more kiddos at the lower end, more kiddos at the higher end. And having that weighted tuition number can really give you a better grasp on what tuition is coming in as opposed to a straight average, which assumes that all the kids are distributed equally, which they never are. We talked about compensation as well, but again, I mentioned that 85% rule. Depending on your situation, you may be at that amount, you may be lower than that amount, but the dashboard should have some type of comparison of your compensation, your faculty levels compared to either the local ISD. Sometimes you compare to peer schools in the area. You can do that as a comparison as well. But the dashboard should have some understanding of how does our compensation stack up with competitors.
David, we have a couple of questions
Yeah.
on about the weighted average tuition. So can
Yeah.
you please explain how to figure that again, the weighted average tuition again?
Yeah, let me use a simple example because I have to do this. I have to do this every time. So let's say you've got let's just pull a pen and paper out, and let's say, for example, let's keep it nice and simple. Let's say we've got 5 kids that are enrolled at $1,000 a year. We've got let's say we've got 3 kids that are enrolled at $2,000 a year, and then we've got 2 kids that are enrolled at $3,000 a year. Obviously, I'm keeping things very simple because I'm doing it on the fly. So the average tuition of that school is $2,000. Now, to calculate the weighted tuition, what you would do is you would say, what's the total revenue that we have coming in at that $1,000 rate? That's $5,000. What's the total revenue we have coming in at that second level, which is $2,000, 3 kids at $2,000, that's $6,000 total. What about at the highest level? Well, we have 2 kids at the highest level, which was $3,000, which comes to $6,000 again. And then what you do is you take your total tuition revenue, which having to do the math on the fly here, which is very, very dangerous, $17,000. And then you would divide that by your total enrollment, which is 5, 6, 7, 8, 9, 10, which is 10. So the weighted tuition is $1,700. Now that's different from the average tuition, where in this situation would be $2,000. Now, what's the point of all that? The point of all that is just to make sure that you have a full grasp on what's the weighted tuition that's coming into the pie, if that makes sense. Because if you just do the average, you may not have a full grasp on the dollars that are coming in. Does that make sense, Mary Catherine? I don't know if I
Yeah, and
explained that
because what
clearly.
you're doing, if you just do the average, is you're overstating it. And if you do, because you have, in that situation, because you have more kids, but they're at a lower rate. And so
So for
that's really,
example, think of the
yeah,
early learning. You may have an average tuition of X, but if the majority of your enrollment is at the lower
right,
grades and the majority of your enrollment is coming in at lower dollars compared to the smaller enrollment at the higher dollars, then yeah, if you just run on average tuition, that doesn't paint the picture accurately. Weighted
right,
tuition gives you a better understanding of what's actually coming in. Does that
right.
does that help?
Right. Yeah, we have another question. Should after-school programs tuition factor into the weighted average?
I
So like
don't
after-school fees,
I don't think so.
we never did.
Yeah, I treat, so let's talk about, yeah, after school extended care, those kinds of things. I treated those as a separate line item under
Yeah.
income, but under alternative streams of revenue. So I would not roll that in to the weighted tuition conversation personally. What do you think, MK?
No, I wouldn't. And in fact, that those would, to me, those would be more under, when we talked about the budgeting of income, you would put that in with fees. And we always took our after school program as a different line item, and it was not, because not everybody does it. And it doesn't really help us with tuition in terms of understanding what we needed to be doing for tuition. It's really an extra program.
So
That's what
again,
I think.
on weighted tuition, one more time, just so I'm making sure to explain that clearly, you basically bring in all of the revenue at the different levels and then divide by your total enrollment, which gives you a snapshot of what's the average weighted tuition, as opposed to just the mean, which is we take all the different tuition rates and divide by the number of tuition rates and use that as the average tuition. Most folks will tell you that the average tuition is a misleading number, whereas the average weighted tuition gives you a better snapshot, a better portrait of what you're actually charging.
Right. And David, we do, we had a question, but I think the answer is we do not include discounts. When we're talking about tuition, we're talking about gross dollars, gross tuition, because discounts come out later.
Discounts
They come
actually,
out.
yeah, and we treat that differently on the
Yeah.
dashboard.
So
Um,
yeah, when you're talking about the weighted tuition, you're talking about gross tuition income.
Absolutely.
Okay.
Yeah, and so then we treat the discounted piece a little bit differently. So you wouldn't get into $5,000 the tuition, but they're actually paying $1,000 because of financial aid. Does that make sense? We would
Right.
handle that in the discount section
Yeah.
of the dashboard. Which, look at that. That's the next item of the dashboard. So once you have a basic understanding of the tuition that you're bringing in, then an analysis of financial aid and discounts is critical. And then the comparison of what percentage of our financial aid and discounts I'm sorry, what percentage of our entire shooting match is financial aid and discounts. This is critically important because you will sometimes find out that you're top heavy on discounts and financial aid. Was that ever a situation in your experience, MK?
No, I don't think so.
Y'all
I
were
don't think
okay
that
with
we
that?
had, yeah.
We've had some schools that have done that analysis when they look at the amount they're giving out in financial aid and discounts, and they were realizing, oh, we're upside down. We're offering too much financial aid, or we're offering too many discounts. by only looking at the enrollment number. And so if we're only keeping our eye on the enrollment number and not talking about net tuition income,
Right,
then you can
right.
get upside down by trying to get that enrollment number up. But then if you're also bringing your financial aid and discount number up, that can be a problem as well. Does that make sense?
Yeah, which is another reason, again, it's so interesting when we talk about, and this is what we kind of talked about in the budgeting, when you get detailed, the more you are able to create a dashboard that gives you some of that detail, you can see things that are obscure.
Yeah.
And when we started dashboarding at St. Albans, it was a game changer because we just began to see patterns and trends of things like what you're just talking about, that we never even thought about.
And without a dashboard, you tend to just look at enrollment. And
Right,
enrollment's critical. We start with enrollment, but that's only a portion of the financial story of the school.
right.
Liquidity. So a school can have a great piece of property. A school can have amazing buildings, but if it runs out of cash, then you're going to be in a really tough crisis. So this goes back to our question of how many days of cash you have on hand. That's a pretty straightforward analysis. We already know what the cost of operating the school is. So you take the total cost of operating the school, divide that by 365, and that basically tells you what 1 day of cost is. And then take that number and multiply that by 120, and that tells you what 120 days of cash would be. Or ISM, like I said, they say 90 days of cash. So depending on which camp you're in, we would just argue that you need to have a certain amount of liquidity, either 90 days or 120 days, to make sure that you can get through a crisis.
Hey, David, we have one other question
Yeah.
backing up a little bit to the financial aid. Do we have a target percentage for discounts and financial aid? Is there a best practice on that?
We really don't. So I will tell you that the schools that feel very, very strongly about that, I've seen schools dedicate as much as 9-10% of the budget to financial aid. But it tends to be a case by case basis. I think that if you're doing less than 4 or 5%, that probably it's time to have a conversation about, are we making the school as accessible as we need to? But we don't have a set vital sign or standard on that number.
Okay.
What are your thoughts on that, MK?
I've heard people kind of had the mentality or the philosophy of we're going to do a tithe, a 10% tithe. I think it's, again, goes back to the community. There were times that we felt like that we were giving, when we increased the financial aid, it did help with accessibility and helped with our enrollment. But I just think it really kind of depends on the community and how the community views that and how diverse the school is already and how accessible it is already. So I don't know that there ever would be a best practice for that.
And it shifts also depending on what the school's policy on tuition remission is.
Right.
I mean, some of our schools offer tuition remission to faculty, and so that should be taken into consideration as well. I don't love multi-student discounts, but some of our schools offer
Right.
multi-kiddo discounts, and so that gets factored into it as well. The important thing is just that you've got a grasp on what you're doing. You've got a grasp on what are we doing in the area of financial aid and discounts, and is it an appropriate number for us?
Right.
I would love that appropriate number to be closer to 10%, but for a lot of schools, that's a growth edge for them. Fundraising. It may be crass, but this is a really strong indicator on people's satisfaction and are they on fire for the school community. So we want to look at the total amount of fundraising. I think it's as important to look at participation percentages as well. So
Yes.
I would anticipate that your board is participating at 100%. Every one of your board members should be either participating on your annual fund or whatever your principal fundraising effort is. And I think faculty should be participating at 100% as well.
Yeah, I agree with that.
It's you have to communicate, the whole tuition doesn't cover the cost, 100% of the cost of what it takes to educate a child here. Now that you've gone through the dashboarding process, you can tell families specifically what it does cost to educate a child here. And so you have an idea of that gap between what it costs to educate a child and what we charge in tuition. So that's a pretty compelling narrative when you're able to say, it costs $15,000 to educate a child here, and our weighted tuition is $10,000. So, I mean, everyone is benefiting from what we're trying to do here. If you're in a position to give a $5,000 donation to the school, can you do that? That kind of narrative.
Right.
Did you have a lot in the kind of communicating the annual fund argument to your parents, MK?
It took me a long time, but yeah, I feel like that was one of the areas that we really got good at by the, over the years, is just really communicating what the annual fund was about, and the dashboard really helped that, because we knew what our operating cost was. We knew kind of what all of that meant. And so we were able to use that information to articulate. And I think that goes back to what we were just talking about earlier, about being transparent and communicating information to your constituency. I think the more you're able to market and communicate properly about the important things of the school, the better buy-in you have. So yeah.
And if you want to move away from the annual fund, some of the schools are talking about moving away from annual fund and trying to really just charge what it costs to attend the school. If you want to do that approach, that's fine, but you've got to have a really good grasp on what it costs to attend your school.
Right. Well, and that also provide, I mean, that approach is fine, but there's an accessibility issue with that.
Exactly.
Your tuition becomes unreachable or untouchable to certain families. And I know that most Episcopal schools want to be diverse and they want to be inclusive, and that's a tenet of who we are as a community. And so I feel like that's a tough sell as an Episcopal school to say, well, this is what we're going to charge, and you just have to deal with it. So we do have a couple of questions, David, that one of them goes back to, I'm going to wait on this one, but we have one question about, is it best practice to be transparent with families about actual cost of educating the kiddos? I feel like, again, that this is hard. And I had a hard time with this because I was afraid at times if I was too forthcoming, that people would then ask questions that I couldn't answer, or that they wouldn't like the answer to. But I think at the end of the day, the more you're able to communicate what the cost is to run the school, people are more open to accepting that than if they don't know what you're doing. Would you agree with that?
I think so. I'm going to hedge my bet a little bit. I guess part of it comes down to I've never seen a program. Most of our programs don't charge 100% of the cost.
Right.
So I guess my opinion would shift if you told me you were charging 120% of the cost.
Right.
I think that
then
would.
You might not want to tell that.
Yeah, I think if that was the situation, that may affect my trepidation on messaging a little bit. In most of the schools I've worked with, when we look at what the cost is compared to tuition, normally it's a larger number. The cost is a larger number than what we're charging. So I don't think I have any concerns about sharing that number. I'd love to hear more from that person about the root of that concern to make sure I understand the question. Do we know who?
It's Colin. If Colin wants to tell us a little bit more.
Colin, let me open your mic up because I'd love to hear a little bit more. So I'm going to turn your mic on, Colin. If you would unmute yourself and tell me a little bit more about your thinking.
Hi. So I think that part of it is just me getting a feel for getting an accurate basis for comparison. coming from mostly a public school background, where, you know, the cost of educating the child is set by the state. We get a predictable amount of money per, um, and, you know,
kiddo,
you kind of know what that costs, and it's very transparent where all the money is going in a lot of ways. And I guess that's, I think some of the, Mary Catherine, you hit on this too, sharing some of my trepidations around, you know, people asking questions that either you know, I'm afraid they're not going to like the answer for that.
Right.
You know, especially around the issues of financial aid and equity, where some people are paying more in tuition and they're also donating more.
Right.
They also make a lot more money. So
right, there is that.
Yeah, you know, Colin, I think you're right about that. And one of the things that I would say to you is that we have to get to a place where we know our information so well that we can articulate it properly. The challenge is that when you articulate it to somebody, then they might begin to go, well, why are you managing the money that way? And that's
Right.
always a challenge. And I had that challenge as well, because I thought, well, you know, if I start to say, well, this is exactly how we spend the money, then people would go, well, you don't need to spend the money on this. You know, everybody has an opinion. At the end of the day, I think there's ways to, and it's tricky, and it's a journey to find ways to articulate what does it really cost to educate this child, and how do we articulate that? And I think it's a journey to find the way to do that. But I know that it's scary, and I don't disagree with you, but you have to, I think, persevere in finding ways to communicate that to your constituency, because at the end of the day, they need to know what it costs.
Yeah.
Do you agree, David?
Yeah, and I would go with your gut. I would go with your gut as you're kind of tiptoeing into these waters. And then I would also not be afraid to ever say, you know what? I don't know the answer to that question. Let me take a look at that and I'll get back to you.
Right.
Because sometimes what they may be asking does require a little more analysis. And so you may not want to provide an immediate answer to why we're, you know, spending that particular amount on whatever until you do a little more homework. But I understand the trepidation. And I think I would go with your gut, and but I think I would err on being a little more transparent, just because if you don't engage, that's a surefire way for them to write their own narrative, if that makes sense.
Exactly.
And there's so many things about private school finance that I don't think our parents fully understand. And so I think a lot of what we're doing involves educating them on what the independent school financial system looks like, or the private school financial system looks like. A lot of parents, you know, don't understand the annual fund. A lot of parents are still convinced that our schools get big checks from the diocese.
Or their own church.
Or their own church. That's, for example, the Roman Catholic model. The schools, if you've ever wondered why those schools tend to come in at a lower price point, part of the reason is because they get a big subsidy from the church. Our schools don't operate that way. Our schools are expected to be financially independent, and a lot of our parents don't understand that. So my general rule of thumb is trying to approach this to really educate parents on the independent school finance approach, because there's so many misconceptions about it. And if we don't educate and create that narrative, they will create a narrative that involves Colin having a private jet.
Right.
Which the last time I checked, Colin, I don't think you came to conference in a private jet. You may have, but I don't think you did.
Yeah. And you know, something else, Colin, is that this is particularly difficult in church and parochial schools. Independent schools don't have quite, I think there's the constituency in an independent school is more used to, it doesn't occur to them. There's not a church there that would give money. So I think we as a parochial schools sometimes have a little bit more difficult time, because there's more narrative out there to fight against.
Thanks.
Thanks for your
Good
question.
question. You bet. I'm going to take this follow-up question on the number of days reserves. Oh, I think that's about the 120-day rule. Yeah, here's the thing about the 120-day rule. It changes throughout the year. So
Right.
I think her question is, should we do it at the end of the year? If you really, really want to do a hardcore 120-day rule analysis, you do it when your liquidity is at its absolute lowest.
Right.
So
Right.
when would that be, Mary Catherine? What month would that? What
Gosh,
month would
for
you
us,
chunk
that was
us?
a lot of times it was December,
So yeah,
December,
right.
January.
Kind of
Um,
before deposits come
yeah,
in.
before we started getting re-enrollment again. Yeah.
So
January, February. In a perfect world, it would be in April, May, and that was true. But we also had big, people would in annual fund they would make a pledge, but they wouldn't make a big fat check until April. And so we would be cash poor. We also got, we have endowments that we would get on kind of at different times of the year. So I think I think of course, it depends on your kind of your school and what you have. But for us, a lot of times it was December, January.
yeah, it just so what we would do is we would just do that analysis at a couple times throughout the year.
Right.
And then whatever the lowest, whatever the lowest point was at cash flow, if that was significantly below 120 or 90, then that was a red flag that we need to talk about. Do we have enough
Right.
reserves to weather a storm? And if we don't, then when we're building next year's budget, we may want to build in some contingency space in the event something happens.
So the dashboard is really internal use.
I think so. Yeah,
I agree.
I don't think the dashboard. I think your finance committee, your board. I don't think I have necessarily a problem with them seeing it, but I don't. I view that as an operational, a strategy tool. I don't
Right.
view it as something that I
It's not a
necessarily
marketing.
share with
Right.
constituency. Is that what? Did you ever share your dashboard?
No, because it's a tool for us to make good decisions. It's not, it's too easy to um, read that and misconstrue things or misunderstand things. And it was for us to make good
Yeah.
decisions.
Definitely head, definitely business officer, definitely treasurer, definitely finance committee. Um, I don't even know if I used it with the whole board. I don't remember if I did or not. Do
Well,
you?
if you're going to use it for with the whole board, you're going to need to be sure that you educate everyone very well, because the reality is that the dashboard is you got to understand it, and if you don't understand it, it's just a bunch of numbers, and it can cause more confusion than help.
So I think we used it with the board. I can't remember if we used it with the full board, but like you said, if you do, make sure that you educate on what the important what these numbers represent and how you should use those.
Right.
Total net assets, we've talked about that a little bit. The number isn't critical. I mean, I would love for that number to be huge, but the size of the number isn't as important as the trend when you go from year to year to year. Are we building equity? Are we decreasing? That tends to be a little more telling to me when I look at that number across the years of a school. Endowment, if you are blessed with an endowment, what's the spend rate? So what's the total corpus of the endowment? What's the spend rate from year to year to year? How much does that represent what you need to balance your budget operationally? Those are the kind of questions I would ask if you're tracking an endowment. If you don't have an endowment, I think the sample we're going to look at, they don't have an endowment. And so that's an indication that we may want to talk about what does creating an endowment look like. Debt. So debt, most boards are very nervous about debt. That's not necessarily a bad thing. However, sometimes well-positioned debt makes sense, particularly if it's going to increase the value proposition or if it's going to allow for increased enrollment as well. The debt has to be manageable, however. So we have a couple of different comments on debt. This is not a scientific analysis at all, but it's a good way to get a grasp on debt. And I do this when I do the Vital Signs webinar. If you take the entire debt and divide that by your enrollments, and basically you're saying how much debt per student are we carrying? If the debt per student is greater than a year of tuition, then we tend to say, okay, you may be carrying more debt than you can comfortably service. If the debt is lower per kiddo than a year of tuition, then that may be well-positioned debt and not a huge concern. Another way to do it is through net. You look at your gross debt, which is everything that you owe, and then you look at what the net debt would be, which is if we paid everything off today, if we took all of our liquid, if we took everything, can we pay everything off or not? And that gives you kind of the net debt. That's another way to analyze it as well. How y'all analyze your debt's completely up to you. The important thing is that you have a grasp on what the debt amount is, what's the trend over the years, and then, like I said, I like to be aware of what debt load are we carrying per kid, just as a way to get a grasp on how much we have. The only other comment I'll make about debt is some dioceses have expectations of how much debt a school can carry based on enrollment. I think the Diocese of Texas has that expectation. So if you are in a diocese that has a canon or an expectation about how much debt you should have, I would track that on your dashboard as well as a percentage. So are we at 100% of the maximum debt that our diocese allows? Are we at 25%? Just to give you another way to measure the kind of debt that you have. And then the final item is, every year, are we having an operating surplus or are we having an operating deficit? And again, schools have deficit years. That shouldn't be necessarily terrifying. However, the question is that deficit sustainable year after year after year? And there's really no way to know that unless you track it and have a grasp on, is that deficit increasing or decreasing, and what is it going to take for us to move from a deficit position to a surplus position? Okay, so those are the 11 different criteria of things that we think you should track. Then the question comes, okay, well, that's great, but what data do we need to make all that happen? And so what we would recommend is just take this checklist and start compiling all of this information. If you compile these documents, then you should be able to create a dashboard similar to the one I'm about to show you. One other caveat: if you are starting from scratch, this takes a lot of time and energy. However, once you get one up and running, it's really not that bad to keep it current. And so that's the payoff, and you're able to really track 5, 6, 7, 8 years, because once you get it up and running, you just add a column every year. But to start getting one up and running from scratch can be a lot of work. So what do we think you should gather? And you should be able to gather all of this. Either you as the head or your business officer should be able to pull all these documents together. So start with your current year budget. Make sure you have last year's financial statements, and then the audited or internally prepared balance sheets and financial statements for the past 5 years. The more aggressive dashboarders will tell you to do it for 10 years. If you're able to do it for 10 years, that's great, because you can really find out some very interesting things if you track it for that long. But depending on what you're able to do, you may not be able to go that far back. MK, do you remember when you started from scratch, how far back you went?
You know, we've got 10 years of data.
Okay.
It may be more than that now.
Okay.
And, but one of the reasons that we did that is because our business manager had already kept all of that data.
Right.
She's been there 30 years. So she's kept that data for years and years and years. So it was easy for her to get in touch, find it and give it to us.
So my prayer for everyone is that they have a business manager like MK had who
Yeah.
can make all those things magically appear. If you
Yeah.
don't worry. Just do the best you can.
Yeah. Just get started. Just got
Yeah,
to start.
total financial aid and discounts for the past 5 years. That may be already broken out in your audited balance sheet and financial statements, or you may have to do that on your own, depending on how you do tuition remission, if that's a question. Enrollment by grade for the past 5 years. Remember, total enrollment's awesome, but that's not going to tell you the whole story.
Right.
Total fundraising for the past 5 years, if that's not broken out as well. Total compensation, if that's not broken out for the past 5 years, it should be. Full-time faculty salary mean for the past 5 years, so you can gauge how your faculty salaries look compared to some of the benchmarks. And then the tuition schedule for the past 5 years as well, depending on how many different levels of tuition that you have, making sure you have all of that information as well. And so then let's take a look at Divinity Day School. So now is the time. I'm going to put it on the screen, but if you have the file that I sent you earlier, go ahead and open that up. And really, all I want to do right now is just kind of walk you through that document. And then what we'll do is we'll see if there's any questions. And let me just switch over to that document. Is the dashboard up, MK?
Yep.
Okay.
Looks good.
So let me just kind of walk you through. And again, this is one example. If you look at this and you're like, oh my gosh, this makes no sense to me, then don't worry about it. That's absolutely fine. But basically, and again, this doesn't read like a financial statement where it all, rolls down into one bottom line number. Remember, these are the 11 different things that we're talking about. But again, this first one, let me get my little arrow up. So this first one is enrollment, and we've got the total enrollment right here. And remember, this is a several year dashboard. So you've got several years, but you basically are tracking total enrollment in this top line. And then these are the retention points that are critical for this particular school. So for example, they were watching that K-1 point. So from kindergarten to first grade, that was a retention point that they wanted to watch. Now in this school, they're doing awesome. They're actually picking up kids as they go from K-1. So that's a great indicator. Here would have been a little bit of slippage for them, but for the most part, this school is magical in that their retention is really, really strong. Now, how do you get that number? Well, if you come down here to the different sheets, if you go to enrollments, what we've done is we've just gone through, and here are all the grades, and every year we've got the grade by grade breakout. This is helpful for me. This may or may not be helpful for you, but I like to go in and shade to show how that class tracks. So for example, it looks like, again, this school is doing awesome on retention, but this shows you that this went from 39 to 37, so they lost a few, but then picked up a few in this grade. So some folks, the shading helps, some folks it doesn't. It really helps me. So that's what I like to do to track how the different how retention is looking. And then we've got the calculations in here already that will calculate your retention. So the formula, for example, if you look here, is just basically already in there. If you plug this data in, it will calculate your retention rates for you.
Yeah, this is actually the grid.
5% retention, like Divinity Day School.
Yeah, this is actually the grid that I was talking about earlier that really gave us an understanding of where we were losing, and it's an incredible tool to watch your your retention rates and to know if you've got a problem, if you've got a leak that is somewhere hidden.
So again, and you can just, if it's helpful, then you can just take this again. You can go, if you're a spreadsheet nerd like I am, you can go through and you'll see that these formulas are already there for you if you want to to use this. But
Mhm.
that's an example of what that enrollment, and then the tuition is down here. And then we're doing the weighted tuition as well there. So for example, here it looks like this school has 1, 2, 3, 4 different tuition levels. So they would take all that in, and then here's the weighted full-time undiscounted
Mhm.
tuition rate as well. So that's helpful. Back to the dashboard. So that's that first piece, the enrollment. And then this is another piece of information that I think is helpful to track, which is the student-teacher ratio. So again, this school, it's Divinity Day School, so everything is in pretty good shape. But you'll notice that their teacher-student ratio is pretty healthy, hovering around 8. The next item is the operating cost that I mentioned. So here's the total operating cost of the program. And then this next line talks about the increase. So they had a 12% increase in costs this year. Then they kind of reeled that back a little bit. Then things stayed pretty flat, relatively flat at 2%. They had a big increase there. Then kind of stayed flat again. Then a little bit of almost a 7% increase. But again, that can generate some really interesting conversations about what's going on with our costs. Are our costs, is there a reason that we're having some upticks, or what's going on where we're not increasing our costs at all? That can be really helpful information as you're getting a grasp on what it costs to run the program. This is the analysis of operating costs per student. So they're taking their entire operating cost and trying to figure out, well, what's it cost to educate a child here? And then you'll see in their analysis that number is kind of all over the mark. So it would be interesting to kind of dig into that and see why it went down from 14.3 to 12, then down to 11.9, then started going back up again. That would be an interesting conversation to kind of dig into. Here's tuition. Here's the weighted tuition for full-time kids. And again, this is where it can be interesting when you look at the cost versus the tuition. So this is really interesting because their costs, like this year, their cost was about what they were charging. Then, in other years, there's a little bit of a gap. So this year there's a little bit of a gap, but not much of one. Here there's right at $1,000 difference. Here it goes up to, almost $2,000 difference. So your results may differ. Most schools that I work with, the operating cost per student is higher than the tuition rate, which you can then turn into a narrative about fundraising. But if you're in a situation where the cost is lower than your tuition rate, then that indicates another conversation as well. They're tracking a yearly increase on tuition. So here was a 4.7% increase, and you'll see their increases have been pretty steady. 2.4 scares me a little bit. They had a big increase this year for them, 6.1, and a 7.7% increase there. So that's tuition. There's a few other things they're tracking here as well. Some schools like to track average tuition as a percentage of the median tuition for comparable schools. So you may or may not want to do that. This particular example doesn't have that, but there are a couple other tuition points of analysis you can do. That takes us to compensation. So again, we've got the total compensation as a percentage of your operating cost. This example doesn't have that number in, but in our schools, compensation as a percentage of operating cost is a pretty big number. I see 80-85% in K.
Right. Yeah, we were usually around that.
Yeah, so that's something for you to keep an eye on, because as MK mentioned earlier, most of our money we're spending on is for amazing, awesome teachers. And that's not a bad thing, but you want to make sure that your parents understand that when you're educating them on independent school finances.
Yeah, actually, that's actually, to speak to Colin's point about being transparent. That is a positive side of being transparent, is that most teachers are are beloved by their students and their parents. And so when you are saying, hey, most of what we are raising in fundraising or in paying in tuition is to make your teachers want to be here, people are all in on that. That's an easy sell.
Yeah, that's an easy one.
Mm-hmm.
So we've got a place for you to also track full-time faculty salary median. And then if you want to benchmark, we've got 2 places in here for you to put what percentage of your median faculty salary compared to your either local ISD, or if you want to benchmark against other private schools or other schools in the association, you can collect that information and put that there as well. So for example, this is where you would put, we're at 80% of the local ISD, and we're at 100% of what other private schools are paying, for example.
Okay, so David, we have a question.
Yeah.
Is the faculty salary median for full-time teachers only, or for teachers and assistants and part-time?
I tend to only track full-time on this just because that's the only way to do apples to apples, in my opinion.
Right.
It's
I agree.
hard to really get, and so I get that question a lot about, do I have any data for part-time faculty salaries? The challenge is every part-time position tends to be a little bit different. There's part-time, half-time, part-time, quarter-time, part-time, as needed. So for our purposes, for the dashboard, and then also for the vital signs piece, it's full-time faculty.
Right.
So the next thing is financial aid and discounts. So in this dashboard example, they're tracking what percentage of the financial aid makes up gross tuition, and then what percentage of the financial aid is taking up for operating costs as well. So this is a school, again, you're looking at that, 4, 5%, 6.4% 1 year. They're not in a position where they were doing 10% of their operating cost or their gross tuition and fee revenue set aside for financial aid or discounts. This is probably, was this about what you were seeing in your school, Mary Catherine?
So year on year, some years it was higher. Yeah, 5, 6, I would say so.
As part of the gross tuition
Right.
coming in. So again, I mean, I've seen schools that have been able to get to 9, 10% on that number. That's awesome if you're able to, but lots of schools, that's a growth edge for them. Current ratio is just a way to kind of figure out how much stuff do we have versus how much do we owe. So normally the ratio in schools is about 1 or 1.1. I think the lowest ratio I've seen is about a 0.4. But this school is pretty stable. This just says they've got more, they own more than they owe, if that makes sense. Is that the best way to describe that, MK?
Yeah. Yep.
Here's the day's cash analysis. So this doesn't say when they're doing that analysis. So we're assuming they're doing it at the same time every year. And it's a healthy number. So they're probably, I'd be surprised if they were doing this analysis. They're probably doing this analysis at the start of the year, since I'm seeing numbers like 306, 209. It gets down to 162, but they're in a very, very strong cash position since they don't drop below 120. Here's the annual fundraising amount. This example does not track participation percentage. I would suggest that you add that. I think you should add percentage of board participation, with the benchmark being 100%. But this is tracking just the dollars of annual fundraising. Here is the net asset piece. So we're kind of tracking whether or not we're growing, and they are, looks like they're taking on a little more liability. Their net assets are up to 3.1, and a low, it was right at 2 million. So that's you want to dig into that a little bit more, but nothing, again, this is a pretty strong school, so nothing too scary about that. Here is where they do not have an endowment. So they're in a very strong cash position, but this would warrant a conversation about, is there a place to have a talk about starting an endowment or growing an endowment? And I'd love to see more information about their faculty salary compared to other schools, because that's a big way that an endowment can help. And endowment dollars are difficult to raise, but I have seen schools be successful at raising endowment dollars if they're earmarked for faculty and earmarked for making sure that the strongest teachers are going to be employed here. Here's the debt analysis. So this is the gross debt, the total amount of debt, and then they're in a strong position. So if they liquidated and sold everything, they actually be in since that's in parentheses, that's a good number. They've got way more, they have way more things and cash than they had debt. So this does not have the debt per student. But to do that, you would just take that $93,000 amount and you would multiply that by the total enrollment number. That would give you the debt per kiddo. And then you would go down to the weighted tuition number, which is, they didn't have it for these years. They had it for later years there. And I can almost guarantee that that number is going to be less than $12,186. So their debt position is fine. And then finally, this is just plugging in the number from the year end. How did we do? And you'll see they had a surplus this year. They ran a deficit this year, a deficit about 5 times that deficit the following year. And then subsequent years, they were in the black and generated pretty nice surpluses. Their surpluses are kind of all over the map a little bit. So here's one that's 982,000. Here's one that's 535,000. So I'd love to kind of dig into that a little bit, because I don't see a gigantic shift in their enrollment. Well, I do see percentage-wise, I do see a pretty nice increase in their enrollment. So that may be the explanation for that. But just making sure that we have an understanding of why that surplus is changing from year to year, and what happened these 2 years when there was a deficit. So I showed you the enrollment and tuition worksheet. That's there for you if you want. I also like to have a worksheet that calculates the number of full-time faculty, how many full-time faculty equivalent positions you have. And so you'll see they started at 56. They actually cut back a little bit, and then they've been pretty steady. So they haven't really added a lot of positions, which then makes me want to go look at their student-teacher ratio, which still stayed pretty steady. It edged up a little bit from 7.4 into 8. But then also, here is the tuition assistance worksheet. So this is an analysis where they have, here is the assistance that we offer in financial aid. Here are the discounts. So you'll see in this particular situation, discounts are provided for early payment. So there's a 2% discount if they pay early. And then I don't see a multi-kiddo discount, but if your school has a multi-kiddo discount, you would factor that in there. And then remission. So if you were offering faculty remission, then that would be in that column as well, for a total calculation of how much assistance that they are doing. So, and then that's just another copy of the enrollment tuition worksheet. So that's basically it. Now, the important thing, again, let me stop the share. The important thing here is, this is an example. So if this example works for you, or if you want to cut and paste, maybe if you want to use certain sheets where the formulas are already calculated for you, and then do a different way to monitor the different dashboard pieces, that's fine too. But the important thing is just that you understand what those 11 things are, and that you're somehow tracking those historically. So let me stop there and see if there are any questions.
No questions right now, but we'll wait just a minute and see if anybody